And he's got it going. There's some like he wants to go to the rave, I think. He's raving out. All right, so we're going to be talking about mortgages, and I'm not a mortgage lender, so I'm not going to even pretend to know anything about mortgages because I say the same thing every time. Talk to your mortgage professional. So today I thought it would be a really smart thing for me to do is to bring on a mortgage professional so you can ask your mortgage questions. Throughout the stream, you can ask me anything about the market, but then I want you to ask my guest, Kyle Seagraves, all your mortgage questions. You're on mute. Mute.
Okay, there we go. I'll take all the mortgage questions. I got to, wow, there's a whole audience.
We had a round of applause there. Everybody's watching the football game today. I'm surprised on
okay.
Thank you for everybody that's popped in. Crow Homestead, SV, Mark XFX12, Debbie Brady, and Lawnmower. Thank you so much for coming in. I even got a marriage proposal before the stream started.
Oh, yeah. Yeah, I think you better address that pretty quickly.
Yeah. I think my husband might have a problem with that, though. Don't you think? Don't you think he might be a little upset?
Maybe a slight problem. I don't think he's worried.
Yeah, well, good. He shouldn't be. I'm not going anywhere. And somebody asked if I was feeling better. Kyle and I both were sick this past week. I had the flu. That's what my husband brought home for me as a present. You know, he always wants to share everything. And Kyle had the COVID. So you feeling better, Kyle?
It's a little bit of a competition. I think I win because I had COVID and you had like a measly flu.
Yeah.
So if we're getting trophies for this, I just want to say I think I deserve it.
Well, okay. You win.
Yeah, I'm on the other side of COVID, thankfully. So still like a little, mostly there, 90%. Yeah.
I would say I'm 90% there. I still have a little bit of like funky chicken in my nose, you know.
Yeah.
I get the sneezes every once in a while, but I don't feel as like a rundown dish rag. I felt like I had no energy whatsoever. I could not. I couldn't handle it. Couldn't handle it. Nope. Kristina says no. 10 out of 10 don't recommend.
I've never classified my sickness as a rundown dish rag.
You know, like a wrung out dish rag, you just kind of like, ugh. You know, you never heard that expression before?
Yeah, no, that's how it feels though. I'm going to start using that.
That's how the housing market feels. Like a wrung out dish rag. It really does. There's no houses available. Everything's unaffordable. And interest rates, the last I saw it was 6.75. Is it still there, or 6.78?
Yeah, we're running in the high 6% range. It depends on like where you're getting averages from. The hard part with the averages is you're looking at a whole mix of home buyers, and sometimes the averages you look at are people who are putting 20% down. They have an 800 score. But yeah, around 6.7 to 6.9 is going to be what most people are going to see if they're looking at buying right now.
Okay. Yeah. So because the mortgage rates have ticked down quite a bit from the 8th. Have you seen more mortgage applications in the last I don't know, last 2 weeks?
Yeah, it's definitely ticked up. When we first hit the high of like 8%, it was almost like a ghost town. It's like nobody wants to respond to you. Nobody wants to talk about buying a house. Understandably so. I think a lot of people were really terrified. And then now that we're seeing rates come back down a little bit, and even just seeing like a glimmer of 6%, I think is making people feel like, okay, maybe it's not all going to continue to keep going up and up and up. And maybe things can approach, hopefully some affordability here soon in the end of the year. But yeah, it's definitely been increasing quite a bit.
Well, this is a loaded question because I know that you probably don't have an opinion about this, but I'm going to ask you anyways. So my biggest fear is because we have such a low supply of homes available on the market, especially when you get into the affordable house range. Like anything that's below the median in an area seems to go quickly. Do you think with mortgage rates possibly going even into the low 6s that it's a possibility that we could see like a run on more affordable homes, and that makes prices go up even higher? That's just your guess.
Yeah.
Like, I know you just do the mortgage part of it.
I know. I have my little magic 8-ball over here that normally tells me the answer for what's going to happen in the future. It's so hard to say. And I think I feel like my theme over the past year, especially with seeing like so many projections about what's going to happen in the market, is
Mhm,
that national data is not a great way for people to understand their local market. And so when we see rates, let's say we see rates drop down to maybe high 5%, low 6%,
mhm,
odds are it's going to bring more people into their market because it
mhm,
makes homes way more affordable when the interest rate lowers. And people
mhm.
feel more confidence that, hey, maybe when I look for a home, it's not going to continue to spike up. But the hard part is everyone's market is different. So I'm in a pretty small metro area. So lower rates probably aren't going to have a huge impact on home prices here, maybe a slight bit. But then you go to somewhere like Austin, you have lower rates and you have a ton of home buyers who are sitting on the sidelines, still with not a lot of homes available for sale. You're going to see probably a lot more likelihood of a price increase in those markets. So it's tough to say, but I think in these smaller markets, maybe not as much of a price increase. But of course, in these like really competitive, bigger urban cities, you're going to see probably a good price increase come from lower rates.
Now because you do mortgages, have you seen more people, like, looking to refinance? Like, if they didn't get the low rates back in the, 2021, 2022, 2023,
Yeah.
are there more, like, refinancing type people or no?
No, because I think most people, understandably so, are still waiting for rates to come down a little bit. I think with where inflation is at and where it's headed, and still
Mhm,
with the Fed's decision to not cut rates or cut the Fed funds rate yet, people are waiting for rates to come down a little bit more. And that's what we would recommend to our clients too is eh, even if you had an 8% refinancing right now to a 7%, I
mhm,
don't think is going to be a great decision. I
mhm,
would wait it out personally until we see something closer to a healthier market, which would be
mhm.
in the high 5% range. When that's going to come, I don't know, but that seems like to me a better time to refinance.
Would it behoove somebody that was thinking about refinancing to go ahead and talk to a lender just to have everything ready for when those rates go down to 5%? When and
Yeah,
if?
yeah, absolutely. Because there's no harm in getting a pre-approval because you can always like there's no obligation. I think people feel like there's like a clock ticking and they have to
Mhm,
do it. Um, Otherwise, someone's gonna get mad or offended. But like a pre-approval costs nothing. It doesn't impact you in any way.
mhm.
So you can always take a look, and then you might see, hey, here's an issue that might come up. So we have 3 months to work on this to get our credit in shape, or maybe get stabilize our income a little bit more when we're ready to refinance.
Cassandra has a really good question. She said, can she buy down her refinance rate? Like when you buy a house, they always say, "Oh, you can buy down points." Can you do that with a refinance as well?
100% can. Great strategy. But a lot of lenders trick people into refinancing by doing that. So basically, a buy down for people who don't know, it's almost like prepaid interest. You can pay some money up front to lower the interest rate. And
Uh-huh.
when you refinance, nobody wants to like pay money out of their pocket to do a refinance. They kind of just
Uh-huh.
want a lower rate. Right? I want a lower rate too, and I don't want to have to pay for it. And so what happens is you've lived in your home for a period of time and you've built equity. You've been paying down your mortgage. Your home is appreciated in value, most likely. And so sometimes lenders will increase the loan amount to pay for those points to get you a lower rate. Now,
Mm,
again, it can be an effective strategy, but what we've been seeing over the past couple of years is a lot of lenders are going out of business. A lot of lenders aren't profitable, they're not making money. And so they're doing things like point stuffing where they're charging you upfront money to lower your rate to try to get you to work with them and not somebody else. And if you aren't a super savvy home buyer, which most people aren't. It's a confusing process. You get hundreds of documents thrown at you. It can be easy to pass that by and say, I guess this is just what it costs, when in reality it's not. And so that's been happening a lot on the buying side in the past couple of years because lenders are getting very aggressive because they're trying to pay their own mortgage, they're trying to pay their bills. And with refinances, that's even more so the case
mhm,
because those points can be wrapped into the loan. You take on a higher loan amount. You've been paying down this mortgage for years. And then a lender can say, hey, we're going to charge you points, wrap it in the loan amount. And so all of that time you've been paying down the mortgage, the loan balance goes back up. You get a lower rate, but you have to look at the break even period of time. How
mhm.
long does it take for you to recover that money? And we want to see, is it like a reasonable period of time? For a lot of points, it's around 3 years to break even. Where if
Mhm.
you refinance or sold within that time, you lost money. But after that period of time, you begin to have the monthly savings. So it's not a one size fits all answer. It's a little bit more complicated, but I know this is a long, way too long of an answer for can you pay down the rate on a refinance.
But that was really good information because a lot of people like because they see that rate, and they know that like, oh, all those people got all that, they got such a great
Yeah.
rate. And like the one thing that I always found kind of sneaky was that people were being pressured to get into houses. They're like, look, you can do this now, do this loan now, and you can always refinance. And I'm like, you're saying that within this period of time, maybe, just maybe, the rates will go down. And if these somebody's like on the cusp of a payment, like they
Hmm.
can't be over $250, and this new rate, the way that they had constructed the loan, gets them at like 245. So they're just on a thread, a wing and a prayer, hoping that
Yeah.
their insurance and their taxes don't go up. And then they're putting them in this loan, and then what if the rates don't change? From the time that they bought,
Yeah.
then what? And then I've seen saw somebody do a balloon payment recently too, and I'm like,
On what? On what? What kind of home did they buy?
it was investment property.
Okay. So it's like a hard money loan, probably.
Mhm. Yeah.
Okay. Wow. The balloon payment's terrifying.
This is a balloon. If anybody doesn't know what a balloon payment is, why don't you tell them what it is, Kyle?
Yeah, balloon payment is like most people get a 30-year mortgage. So over
Uh-huh.
30 years, you pay it down to zero. A balloon payment is, hey, you have a kind of a standard monthly mortgage payment, but then let's say after 5 years, all of the rest of the loan is due right at that time. It's common with hard money, and people will, the
Just
expectation
refi.
is you refinance into a long term loan, but that's
Mhm.
banking on the fact that you have the ability to refinance. And with Christine, I'm curious your perspective on this. Over the past, oh man, how long is it? 30, 50 years, we've had two declines in median home price that have lasted anywhere between 3 years and 6 years.
Mhm.
Do you feel like we're going to see also a decline in median home price that's going to last a similar period of time here in the future with how much home prices have increased?
Eventually, there's going to be an adjustment to some housing markets in some areas. It's just like you were saying. It's if you're talking regionally, I don't think the amount of correction is going to be as significant as people are hoping for to find an affordable house. Like people
Mhm.
are expecting numbers to be back where they were in 2019. I
Yeah.
just can't see that equity just disappearing overnight. Unless, and this is a big giant what if the jobs market collapses, people are losing jobs like crazy, then they get into a point of desperation. And that's what happened during the last financial crisis. Not only did people have terrible loans, they were losing their jobs too. So
Yeah.
they became desperate and they would short sale or foreclose on their house at a more rapid rate. If we have something like that happen, then we're going to see more significant home prices, drops in home prices. But I still, even then, I just don't see people going below the numbers that we saw in 2019. I just can't see
Yeah.
all that equity
And are
to be
you
such a
are you
eliminated.
following like corporate home buying as well? Like
Can't
corporations
stand it.
coming in purchasing?
I've done so many videos about it. It's
Okay.
awful.
The
It's awful.
how do you feel about um if we see that correction in home prices, do you think that corporations are going to uptick their purchasing of single family homes during that?
Absolutely. 100%. That's what started it all. It was the catalyst during the last financial crisis. These banks were by Wall Street were told to sell these crappy loans, right? So then they sell these crappy loans as a big bundle, and they're like, "Hey, we are stuck with these houses. You're going to buy back the mistake." So they bought back the houses, and they said, "Shit, what do we do with them?" And so then they went ahead and started renting them out. They started renting them out, and they're
Yeah.
like, "Oh my god, we can make so much money off of this." Blackstone was like, "All right, well, we'll go into invitation homes." And then they just started buying them all up, and then they
Yeah.
lie about how many homes they owned. They've been saying they were reporting the same number of homes that they own for the last since 2017. If you look up
Oh,
invitation
really?
homes, that number is the same number as it's been since 2017 about how many homes they own. It's a lie, big lie. JA has a question though. It says, "What happens in our economy for interest rates to drop? What happens in the economy when interest rates are to drop?"
So what would need to happen for interest rates to drop? First, I think a drop is probably not going to happen in anywhere in like the medium to probably long term future. It depends on what we're talking about with drop, because when we saw rates at like 3%, that was because the Federal Reserve was purchasing uh, close to $100 billion per month in mortgage-backed securities.
Mhm,
Long story short, when they do that, it artificially lowers mortgage interest rates. When they purchase all these bonds, it just tanks the price of rates, which is
mhm.
great for people who are looking to buy a house at that time. But it is extremely unlikely we'll get back to that scenario, because currently the Federal Reserve is trying to get all those mortgages off their books. They're letting those lapse or selling them, and so that would have to end, and they would also have to begin purchasing that amount of money again. And the reason why they did it, they purchased that amount of money in the beginning to get to 3%, was primarily because we had a global pandemic. So that was why they wanted to kind of
What?
spur
No, what
everything.
happened? There was a what? Just kidding. I don't remember that.
There was a big thing that happened,
No
and
way, really?
everyone panicked, and so that's mainly why we saw those rates. So why rates are up right now is primarily because of inflation and government spending. So right now, it's going to look like, if we see inflation come back to the Federal Reserve's target of around 2%, then likely we'll see mortgage interest rates get back to kind of a healthy level. And what a healthy level is mortgage rates tend to be around 1.5% to 1.75% higher than the 10-year treasury on average over like a long historical period of time. And
Mhm,
right now it's quite a bit higher than that. And so that tells us there's something in the market where, hey, interest rates aren't really where they should be. And it's primarily because of inflation that the Federal Reserve has been trying to fight, which is why they increase the federal funds rate to try to slow down the economy so inflation comes back down. So really, that's the main thing that everyone's kind of waiting on. That's why rates have been kind of volatile, so so much so recently, is because every time we get news about jobs reports or inflation or anything that's coming out, any economic data that's coming out, everyone's reacting emotionally to all of this economic data, and that's what's changing interest rates so much. Is because we're all waiting on, will inflation come back down to the target, because that's driving the Federal Reserve's decision to either keep where they're at with the federal funds rate or to lower interest rates over the next year.
I like to watch the oops. And he just took you off. I like to watch, Jerome Powell when he talks, because like, he'll read his statement and the stock market will just kinda just trickle along. He's, saying some stuff and they're just following along. And then once he gets to the portion where they're asking him questions, where the reporters are asking him questions, like, as soon as he says things and it's like, "What?" It's a head scratcher. As soon as he does that, it goes,
Yeah.
it's like
Yeah, it
yeah.
is 100%. Like the whole bond market, like mortgage markets are all based off of like certainty and uncertainty about what's going to happen in the future. And
Mhm,
right now, we came out of a very uncertain future for a while with the global thing that will not be named. And now we're
mhm.
even, trying to recover from that from a federal economic perspective. And it's still really uncertain. And that's why there's so much volatility happening with rates.
Well, we're not the only country that's dealing with this problem. Like, that's what
Right.
everybody's like, "Oh, we're a mess." I'm like, "Oh, we're not nearly as a mess as a lot of other countries." We're doing pretty in the grand scheme of things. If you put our economy on the map, we're not doing nearly as bad as a lot of the other major countries out there. And
Right.
you know, I haven't necessarily been really like thrilled with the inflation. I don't like paying for all these things. Um, I don't know. I'm ready for Congress to get involved, because a lot of the inflation that it's been thrown on us was unnecessary. by a lot of these
Mhm.
corporations, not just housing, like
Yeah.
everything,
There's
and they did
I
it on
want to
purpose because they knew they could, you know?
I want to touch on a comment real quick. Someone said there is no inflation. This is greed driven. That's why you must examine CPI and listen to corporate profits. Uh,
A lot of it
that's
is in
that's what
some cases.
inflation is. Inflation includes corporate profits.
Agreed.
So right, inflation is not some made up thing. It's the prices of goods go up, and part of that can be not just supply and demand, but also driven by corporate profits. And so that is what inflation is. Those aren't separate things.
Right, right. But the thing is that like it did for in some cases, for instance, it didn't cost the company any more to produce this specific product, right?
Right.
And they were like, well, everybody knows everything costs more. So we're just going to go ahead and tack that onto the price because we're going to push the public as far as we can to see what they can tolerate. And they're tolerating a lot more than we thought they would. So they kept pushing the prices even
Hmm.
higher, even though
Yeah.
there was no need for it. It was unnecessary. They just knew that they could. So
Yeah.
they just jumped in and did it.
Yeah, I think the primary, maybe not the primary driver, a huge driver of what we're seeing with inflation, and inflation is just, again, it's not some mystical thing out here. It's just one word used for why is everything going up in price,
Mhm.
is primarily because, yeah, when uh, COVID was happening, a lot of these companies were able to push things up because maybe the cost of production increased. But then now that that has gone back down, we don't have as many like infrastructure issues. They've realized, well, we can just keep the prices at the same point. People are still going to pay. They don't have an option. And so rather than bringing back down the prices, yeah, you have corporate greed that is also um, creating, contributing largely to this massive issue here.
I just filmed a video, Pullet Group and was it Pullet and Lennar Homes was on a call, and they were on their corporate earnings call, and they said, "Oh, we can easily build." This is during the height of the pandemic when houses were going like popcorn. They were like, "We could easily put another 1,000 homes of product on and sell them, but." In order to keep prices high, we're choosing not to put these houses and build these houses because we can make more money by holding back supply.
Yeah.
And they were like, "Why would we do that? Why would we build more houses?" And I'm
Right.
like, "You guys are."
You would think that would be like an antitrust problem at some point.
That's what I'm saying. That's what I'm saying. Like it's gotten to the point where, some of these groups, the highest they're just like too big to fail. Like we can't smack them on the hand because they're doing so much for us. No, they're not. They're doing a lot of things against us. So I don't know. That's my little conspiracy hat thing going on. JK says, question: if we got the Fed's neutral rate, where would mortgage rates be at? That depends on the bonds market, though, right? We can't really like make a magic number out of the air.
Yeah, really the only indication that we have of this, and I covered this just a little bit ago, is what the 10-year Treasury is in relationship to where mortgage rates are at. Usually, we see average mortgage rates around 1.5 to 1.75% higher than the 10-year Treasury, and that's just looking at it historically. So there isn't a good. That's really the only way to look at what's a neutral rate is kind of what have we seen in the past. Would To me, that's what most people are following to see what is like a good equilibrium of mortgage rates in the market.
I just I'm worried that if mortgage rates get into the fives, what's going to happen to, because I always talk about affordable housing options. And it seems to me the most affordable homes are the ones that get scooped up the quickest.
Mhm.
And it's very difficult for like a first time home buyer to find a home that would be affordable, even though they have like really good credit, they have a really good job, they even have a really good down payment, but they can't find anything in their area that's affordable. And when it comes on the market, they're
Yeah.
fighting with 10 other people. And so you end up with, in some cases, in some areas, with bidding wars all over again. So it's driving the price up for those smaller first time homes more than I've seen in a very long time. Even during, when we had the big run up of the housing market, in 2007 and all that, before the crash hit, even then it wasn't nearly as bad as it is now. Not even close.
Yeah.
There was not bidding wars like we've seen in the last few years. This is insanity to me
Yeah.
because of the lack of supply.
Right.
Back then we had more houses that were being built, and there was more supply houses on the market, not like today. So,
What is your advice to those people who are first-time home buyers and they're maybe they're on the lower to medium side of budget or home price in their area, who they're running into that problem? It's like everything that's affordable is either getting taken or it has all these bidding wars going against it. Do you have any advice for those people?
well, my whole thing is that, you want to just find a piece of real estate to live in. So it may not be a house, which you really wanted. You may have wanted a house really, really badly, but should look at other things like a townhome. You should be
Mm,
looking at other things like a condo. You can look at manufactured homes that are not in a park, that are actually on a piece of land. I even tell people, like, if you look at the piece of land itself, you can keep that manufactured home until you decide, or you have enough money to build your own dream house, because a lot of times manufactured homes are sitting on really nice pieces of land. So, like, it's very common here in Louisiana that you can get a piece of land, you put the manufactured home on it. Several years down the road, when you've saved up the money, and then you can take that manufactured home, put it towards the back of the property, and then build your dream home on the front of the property. Now you have another piece of real estate that you could either use as like a guest suite, or something like a mother-in-law suite or a game room, or you could use it as an income earning property. That a lot of people do
mm,
that. They'll keep it, they'll put it in the back of the property, and then they use it for a rental, which is something that people should consider outside the box. Just because it's not a house, that doesn't make it less of a piece of real estate, and it gets you out of the rat race of
yeah.
renting. At least you have something that you can call your own, and it's your stepping stone into real estate.
Yeah. Yeah. I like that.
Me too. I tell people to do it all the time. As a matter of fact, I just recorded a video, and I was telling them, like, I know some people are going to tell you don't get a manufactured home, but let me explain why you might want to consider it.
Yeah.
And
Yeah.
I just literally, those words had just come out of my mouth, so that's why I was on deck.
Right.
Derek Gonzalez says, question: I heard about people with low mortgages having golden handcuffs. What does that mean? I know what this means, but go ahead. Golden handcuffs.
Yeah, it's just the majority of people have an interest rate below 5%, who currently own a home, and so it's in their mind. If you had a home that was at, let's say, a 4% rate, and all the other homes you were looking at have gone up in value way more than when you bought, and your current rate would be maybe a 7%. It doesn't really give you a lot of incentive to want to go out and just buy another home, because it's usually, well, maybe not usually, most of the time people buy, it's kind of a move up purchase. They went from maybe a smaller home to maybe it's a little bit bigger, has a bigger yard, has an extra room for, they're growing their family. So not only is the home going to be more expensive just because it's bigger and has more features, but also because the prices have gone up and the interest rate is up. So
And your
looking at
taxes
that,
are up, and your home
yeah,
insurance is up.
yeah. And so why would it really doesn't incentivize you to want to go look somewhere else when your current payment is so low. Even I bought a home a year ago. It's like my current mortgage payment compared to if I bought a house now in my neighborhood would go up by at least $700 a month. And so I'm not looking to move, but it's like, wow, that really starts to disincentivize wanting to sell this home and go move into a higher mortgage payment.
The amount of my house has gone up since I purchased it. And with today's interest rates, I couldn't afford my house. Like, I couldn't afford my house.
Yeah.
And there's a lot of people that are like that. Like, they couldn't even afford their own house in their own neighborhood with the amount that their home has increased with interest rates. It's
Yeah.
wild. It's
Yeah.
wild to think about,
And with some homes like increasing in value by over $100,000 in some markets is like insane. The
That's
difference in who's able to purchase those homes has changed dramatically. And I saw an article. This is a long time ago, and they were kind of relating a little bit of this housing market similarly to how nepotism can impact people working in certain companies, and basically where it's a lot of people who are have the ability to purchase now benefited from the increased appreciation that they got. A good example is people who lived in California, sold when their home values peaked, and then moved to somewhere like Phoenix. That was a huge issue in Phoenix because all these people benefited from the crazy appreciation they got, and then
That's
were
what
able to
happened in
cash
Austin.
in. Yeah, yeah, similar in Austin. And so for people who are just coming into buying their first home, you're competing against people who maybe don't have generational money, but it feels very similar because they benefited from the crazy appreciation, and you didn't have. It really just came down to a matter of luck. Of you just weren't in the market at the same time that they were, and they got really lucky with the appreciation that they got, and were able to cash in.
Well, Florida used to be, somebody asked about affordable land in Florida. I don't know any places personally, but if you want somebody, I'll help you with finding you somebody that can help you find affordable land in Florida. But when years ago, Florida used to be super affordable. That's why all the snowbirds would either buy a second home or just retire down there because they were like, I mean, my house in New Jersey cost this much, but I could buy quadruple the size house in Florida for this. So that drove up prices in Florida where it used to
Yeah.
be extremely affordable. Now it's like it's expensive. My parents bought a house. I think they spent I think it was like 250,000. And that thing I think right now is near $1 million.
Yeah, that sounds about right.
Yeah, and it's, just a simple 3-bedroom, 2-bath house, I wouldn't say simple. I mean, it was 2,500 square feet, but even still, I mean, my God, that's a lot of money to increase.
Yeah,
And they had bought that in early 2000s, early 2000s.
yeah,
So
yeah.
crazy. Yep. Karen has a question. Why are they charging 10% plus interest on mobile homes in parks? Ooh, I actually have the answer for this. Do you know the answer to this?
No, you take it.
Okay. So, the reason Kyle doesn't know this, not all lenders do manufactured home financing. So it's a different aspect of lending. So whenever you're in a manufactured home park, that land that's underneath it is leased land. You as a purchaser, you will never own the land that's underneath it. But the manufactured home itself is going to be on a mortgage, but it isn't like a traditional mortgage. You're not going to get your, traditional conventional 30-year fixed rate mortgage. You're going to have a shorter mortgage terms, and you're going to have a higher interest rate because it's a risk, and they're
Mhm.
weighing out the risk. And in order for them to do that, they have to charge more interest. It really is crappy though, because they're to me, it feels very predatory because they know that the people that are doing that are buying in a park and are buying a manufactured home and they can't afford a piece of land, they're mostly the people that don't have the highest incomes. So because of the way it's set up, mortgage companies to do those kind of loans can charge a lot more in interest, so they make more money off of them, but they say they're taking on the risk, so that's why they can charge so much more. And so it believe it or not though, FYI, the administration for the Affordable Housing Act that they just did, or I forget what they call them. They always call them something, but they're actually going to make it better for people getting loans for manufactured homes, where they would have more favorable loan terms than they do now. Because usually they're
Okay.
like, you only get you don't get a 30-year fixed rate mortgage. A lot of times it's like 21 years or something like that. It's something wild, and it's like at a
Yeah.
10%. And who's that helping though? It only helps the bank, because the people that are getting a manufactured home, they don't need a 10% interest rate. That doesn't seem very fair. They need something more affordable for them.
Yeah. Is that a bill that's been introduced, or has it passed?
Let's see. Hold on. I just pulled this up again.
And
Filmed
they
this
always have
video
some weird
today.
weird acronym and
Yeah, let's see here. Hold on. It is through the it's GAO.gov Affordable Housing Summary. It's it's through through it's through for Joe Biden. Joe Biden wants to do this. All right, I'm going to read this aloud. Manufactured housing and fabricated factory-built homes can be more affordable option for low-income home buyers. With some borrowers may not qualify for mortgages, it might have to turn to other kinds of financing that there's less favorable terms. Several federal agencies, including HUD, have created a new or modified existing loan programs to help manufactured home borrowers. HUD has also taken steps to improve financing for manufactured housing, but hasn't fully implemented several proposed changes.
Interesting. Okay.
Yeah. So, the terms are crap a lot of times. The interest rate's garbage a lot of times. So they're working towards making it better. Let's see what happens.
Yeah. I, a little bit of the problem I imagine is after we had the 2008 housing crash, because of all these like unregulated products, you then have GSEs like Fannie Mae, Freddie Mac. They're trying to come in and like standardize the mortgage process, but I feel like what got left out of there was people looking at something like a mobile home, because manufactured homes that aren't mobile still are a really good option and fall within Fannie Mae and Freddie Mac guidelines.
They
There's
do.
still a couple little differences that can be
The year it was
annoying to
built.
work. Yeah, annoying to work through.
Mhm.
Or it has to be like it can never have moved ever in its life. It had to go
Correct.
from manufacturer to the land, be there permanently fixed, and it has to include the land. But we haven't seen that same kind of codified practices for lending on things like mobile homes that don't include the land, because those kind of fall along a lot the lines similar to like an auto title more than a real estate title. And so I think that's a lot of the issue. And I hope that gets fixed because, like you mentioned, it's a great affordable option, but comes with the higher interest rate because it is riskier to lenders.
Do you wanna know something that's, like, the worst part about this? So, a lot of people will buy their manufactured home, put it in a manufactured home park, and they've been paying everything on time for forever. And let's just say they're in their 15th year of their chattel loan that they got for their mortgage. They've been paying their rent on time. In swoops a big corporation that has bought out the whole entire park, and they're going to make the new corporation's going to save the day and make a bunch of improvements and stuff, but in turn your rent now for your land is going up double, right?
Hmm.
And they can do that. First of all, there's no regulations for manufactured home parks. They can do whatever the heck they want on those parks. They can do whatever they want. Most states have no regulatory oversight when it comes to them. And so they can charge double overnight. And then they can continue to raise it until they force enough people out of that park to either A, sell it to make it a neighborhood, or B, get other people to come in and start paying rent for those properties. Because what happens is people that are on fixed incomes or low income, there are only so much they can be stretched out until they're forced out. And
Hmm.
you can technically remove your mobile home because it's mobile, but it costs tens of thousands of dollars. If they can't pay the rent, they don't have, $10,000 to move their home to another location down the road. It's
Yeah.
like impossible. Some parks have heard the warning calls of this and they are like, "Hey, if you're getting bought out and you want to come to our park, you can." Some are doing that as long as it's within a certain, distance, so they don't have to pay that upfront fee because they want the residents there. But a lot of times what they're doing is they want them to leave, and they want them to leave the house because then they can rent out that mobile home. They can just buy that foreclosed
Okay.
manufactured home, and then now they own it. So now they have a bunch of rental properties now that they are, like everything's included, and now they own the house and they got it basically for free.
Wow. Yeah.
Gross, huh? Totally
Yeah. There
gross.
probably needs to be a little oversight with those things.
There should.
I'll say Jay's solution was so I should buy manufactured home parks. It's the
A lot of people do.
maybe not
They
the
call
right.
'em they call themselves, if you go online, they call themselves trailer park millionaires. That's what they do.
Oh, really? Okay.
Mhm.
I
There's, like
wasn't aware of that.
there's several guys that are out there doing it, and some of them
And
are
their whole
doing.
thing is they go in and just like kind of predatorily just jack up prices. They purchase it and just raise the
Absolutely.
price. Okay.
So, there
Interesting.
is his last name is Rolf, and the only reason I know that is because that's my aunt's last name, but, I think his name is, Jeff Rolf, Jack Rolf, something like that.
Okay.
Anyways, he runs Mobile Home University, And he teaches people to do this. And he was quoted as saying, "You don't have to worry about the residents. They're like customers at Waffle House that are chained to the booths. They have no choice."
Mobile home university. Oh my God.
Yeah, he's disgusting. He's disgusting. Yeah, Peter Mangona,
Well, they're still
sorry.
selling CDs if that tells you where they're at. There's a picture of a home study course that has about 50 CDs in a
Yeah,
booklet.
but their demographic of people that are buying with them will be using CDs.
That's fair.
Okay. Yeah,
Wow.
so
Okay.
Peter says, question, why is it different from the early 80s when rates spiked, transactions collapsed for years? This feels the same. Do you feel oh, Frank Rolfe, that was his name. That's the guy that runs Mobile Home University. He's he's
Okay.
he's a strange guy. Not gonna lie. Like he doesn't look at people as people. We're all commodities. And the way he talks about people is just
You can get
gross.
that energy from the black suit and the white shirt.
Yeah. Yeah, they probably were like, "Okay, try to be more human. Try human. Can you work on human?" Yeah, less robotic, more
Right.
human. Can you give that to me?
I'm gonna have to look
Peter
into this
says,
a little bit
"Why is
more.
this not different from the '80s when rates spiked and transactions collapsed for years? This feels the same." Um, what
Yeah,
would
you
you
take
say?
that.
Well,
Um,
you
yeah, go
give your
ahead.
opinion, I'll give mine.
Okay. Um, Mainly so we already saw rates go up to 8% and then come back down a little bit.
Mhm.
The main difference that we're seeing here primarily is we still have way more people who are wanting to buy than there are homes available for sale. Like,
Pent-up demand.
yeah, so much more than people are I think are imagining, because I see a lot of these articles about like, oh, there's more homes coming for sale, and then somebody runs with it as like, all right, solutions here, we're all good, it's fine. It's like, no, not only are we in like seasonal growth coming into the spring, but there are so many people who are waiting to buy a house and looking to buy a house, specifically one that they can afford. And even when we saw rates go up, I saw people who were like, who's purchasing these homes? Don't forget, we were talking about the people who have money from they were able to benefit from home prices appreciating so much, and so there are people who are still able to purchase when rates were 8%, and with the home appreciation that we've had. Some of them are first time home buyers. Some of them are, or I say a lot of them are dual income earners, high income earners, and a lot of people are people who are benefited from appreciation. And so even though we saw the rates increase, there's still so much demand for housing that we aren't seeing interest rates completely deter people from wanting to buy a home. And then, I think they said transactions like lowering or something like that.
Well, yeah, we had a decrease in the amount of transactions, but that didn't make you would think that that would make home prices drop, but it didn't.
Hmm.
It made them stagnant. We had stagnant the home sales, stagnant home
Yeah.
prices. And then once rates started dropping again, anything below that median price in an area, anything in that lower range, that first time home buyer range, they those prices continued to go up. Even when everything else was stagnant, those prices continued to not inch up just a little bit.
Yeah.
Not significant. The difference, like you said, is the amount of people that want to buy a house. We have so much pent up demand, and we have not built enough homes for the amount of people that need a house. And the only thing that we've done to, allow circumvent this problem that we have is we've allowed corporate America to come in and make these build to rent homes because they're like, well, we're filling a need. You want a house? We can build it
Yeah.
for you. All you have to do is rent the dream from us. We're saving lives. That's how they're packaging it to people. And whenever you hear them on television talking about, like we're really helping the affordability crisis, we're filling a demand. Kids these days, they don't really want to own a home. They want to, live in a place for a couple of years, and then they're going to be off to our next community. And then they can always have a brand new house every few years, kind of like leasing a car, you know?
Mhm.
Uh,
Yeah.
what?
What what's your thought on so like obviously I know where you stand on corporate buying, and I think we're on the same page with that. I'm curious your thoughts on with people who currently own a home at a low interest rate and they want to buy another home and renting out their current home instead of selling.
If they
Do
can
you feel
do
like
it.
do you feel like we're going to see a lot more of that happening, and is that going to shift, or is that going to limit the amount of supply that's available?
I don't see that happening with a lot of people because most people live in fear, you know? So a lot of people, when it comes to owning a home, they definitely take the equity out of that first home to buy the second home. They have a fear of holding on to two properties because that's two pieces of insurance, that's two pieces of taxes. And then, because they have a second property, they can't homestead, so their property taxes go even more. Then they have to set up an LLC that's too much for the average person to
Yeah.
wrap their head around in order to do it. Like I just don't foresee a bunch of those type of houses coming about. Now I do see in some areas that are vacation spots where legislation has changed for Airbnbs. I see those homes being available, which would alleviate some of the problem with affordability in the area for smaller houses. But there isn't enough Airbnbs around the whole entire country to solve the issue.
Yeah.
Depending on the statistic you want to look at. One statistic says we're short 3 million houses. Another one says we're up almost 7 million houses. Whatever you want to look at in between there, if you take the two numbers, around 5 million homes we're short in the United States, and we can't build those overnight. It's just not
Yeah.
going to happen. So, yeah, I I think it would be a great idea for somebody to do that if they could take their smaller home and rent it out. Like I was saying earlier with someone owning a manufactured home and using that as a rental later on down the road. Um, I just don't know how many people would actually take that on because there's a
Yeah.
fear. There's
Right.
a fear about it.
And I imagine a lot of people also feel like it's maybe not even something they consider. Like it's not something that they ever thought that they could do. But I
A
think for a lot
smart
of people,
lender will always tell them no.
yeah, yeah, it's. I think it's so much more available for people now who are in that spot versus, yeah, you didn't have to go out and buy an investment home. If you're looking at buying somewhere else, you kind of already have your current investment home at a low rate compared to if you're looking at buying an investment home now. If you think like the rate on, buying as a first time buyer is high, the rate on an investment home is even higher because there's a lot more risk with it. And so it's a really good option for people that I just feel like a lot of people don't consider or aren't aware of.
A good lender will tell him no. Like, I work with a guy here and he'll like break it down and he'll say, look, I'm going over your numbers and stuff. Have you thought about keeping your property? This could be a
Yeah.
great, he'll tell him, but not all lenders will do that. I wish they would. I wish they
Right.
would because, I like for people to have freedom and owning a home and then having a rental is freedom. Like my parents were always like, "Ooh, I don't know if you want to do that," but I mean, I've seen it for myself. Having another property, another
Yeah.
place you can tap into equity, another thing that helps you get income into your house. That's a good thing.
Right. Yeah.
Gone Rogue says writing this with complete extemporaneous exper. I'm not even gonna try it.
Extemporaneous. Extem-
Extemporaneous intent. It seems that only individuals with uh wow, someone is using their big
I
boy
know
words
there's a
today.
thesaurus out here. Is that
Devotees
commodious?
bank accounts can afford to purchase a home in today's economy. Wow, those are some big words. Thank you for making me use
I
my
feel like there was an
dyslexia to
easier
the
way to
point of
write that.
exhaustion. You know what though? In a way, he's right, or he or she is right. If you think about it, it's gotten to the point now. It's the haves and have-nots. If you even look at the age of the person buying their very first home, it has gone up like 7 years in from the time I purchased my house. When I purchased my house, the average age of somebody buying a house was 23 years old. Today, I think it's like 32. You know,
Yeah.
that's a lot. That's a big
Yeah.
change in society from when you could afford a house. My husband, I
Yeah.
always tell the story. My husband and I when we bought our first house, I was a hairdresser. I was not making bank. I was not rolling like in dough. And we were pregnant with our first child, and he was a salesman, and he wasn't, killing the universe either with deals, but we were able to buy a house. There is no way in God's green earth that same house with the jobs that we worked would be able to afford that house today. There's
Yeah.
like no way. No way.
Yeah. Yeah. What we found in like, so as a, a lender perspective, most people are pretty much emptying their bank account to buy a house. So step one is like, can they afford the monthly payment? And if so, it usually is that they're using every single cent. Wait, was something wrong?
Did you read the comment? JK says,
Oh, it's
my
small.
wife says,
Oh
Kyle looks
God.
dreamy. I told her to go make me a sandwich.
Oh God. What kind of sandwich?
Sorry,
'Cause that
I
sounds
couldn't
really good right now.
stop. You are dreamy. You do have that dreamy voice.
Oh gosh. Well, I want to know what kind of sandwich it is. That sounds really nice. Well, yeah, people are really the people who are buying most of the time are spending almost every single cent that they have in their bank account. And we don't recommend that. I don't think that's a really good way to buy. I think you need at least 3 months of an emergency fund before you look at purchasing a home. You don't want to get into a situation where you buy the home and then something goes wrong and you have to go into debt to fix it. I like there's one time that really stood out to me. I was working with a guy and he had extra money. He didn't empty his bank account to buy a house, but bought the house, and the next day they had some sort of like pipe burst,
Mhm.
and it wasn't anything that the seller knew about. But they end up coming back to the realtor and saying like, "Wait, is the seller paying for this?" And she's like, "Well, you closed yesterday. It's
Mhm.
yours.
Oh,
You
yeah.
did due diligence. This wasn't something that they would have known of or had disclosed. And it was going to be." It was something underground. I can't remember exactly what it was.
Mhm.
It was a while ago, but it was something to the tune of like $2,000 to $3,000 for that fix. And he was like, "Why am I paying this? Like, you bought the house, it's yours."
Yeah, it's yours now.
Um, yeah, and so I'm just so afraid of people getting in that situation of spending all their money buying a home and then not having any left over. And that's why I'm always people are so critical sometimes of low down payment options. And I
Mhm.
think they're really good because you use the down payment to secure the house. I don't want people to spend all of their money on the down payment and not have any left over as a cushion. And so what we find a lot of people do is they do a minimum down payment, even like if they're doing a VA or USDA loan with 0% down, but they still have money in the bank. Having a low down payment doesn't mean that you don't have money. It just means you're not spending all your money on the down payment. You're able to use it as a cushion. You're doing repairs, moving expenses, whatever else that you need that money for.
When I was young, I was like, I have to hold on to the cash. I need to hold
Oh,
on as
yeah.
much cash as of my own cash as possible. I don't know. Do you do rural development loans?
Yeah, we do. USDA.
Yeah,
Mhm.
USDA loans. A rural development loan is a good loan, and
Yeah.
they also have rural development loans for manufactured homes. So I don't know if you knew that.
I love I love USDA loans, mainly
Mhm,
because like the area around here, you
mhm,
can 10-minute commute downtown and you can buy anywhere is USDA eligible.
mhm.
And most people don't do them because they're a little complex. And
They're
I
a
think
little bit
people
more
just
work. They take longer
yeah,
to close.
and they can be a tight box to fit into.
Mhm,
But I loved them because so many times someone would come to me, had no clue what it was, and I'd be like, I can we can get you this house 0% down, super low mortgage insurance. And often, at least at that time, the appraisal would come in higher, so all their closing costs could be included in it. I
right.
had people. I'm not saying I can do this for everybody, but I had people where they would get a check back at closing for their prorated taxes. So instead of bringing money to the closing table, they would end up getting a check for like $500, maybe $1,000 at closing for their home, again from the like 6 months tax arrears that they would get from the seller. So
Mhm.
fantastic options, but they can be a little bit tight to qualify for sometimes.
Yeah, they do take a little bit longer too, like, 'cause you have a different underwriting
Yeah.
process when it comes to those, but they're
Mhm.
great. I wish more people weren't afraid of them. Sometimes I think some lenders talk people out of them because they don't know how to do them. Because
Yeah,
I've
most
had
of
that
the
happen before, and I'm like, "Hold
time.
on a minute, let's talk to this person because I think, yeah, something's not right." Oh,
Yeah.
somebody had a I was gonna read that comment, Eddie, it said, "Neat surprise for me, I've been watching Win the House You Love for a while, definitely going to rewatch." Thank you, Black Bottoms.
Oh,
Thank you so much.
thanks.
Yeah. You used to pop up in my For You page a lot. I haven't seen you in a while, so I was glad to
Oh, no, did I disappear?
you
Oh.
disappeared. You disappeared on me. Uh, Love for Puppy says, "Do you have to wait to refinance an FHA, or is it like conventional where you have to refinance after closing?"
It depends what type of refinance you do. So if you go from an FHA loan to refinance it into an FHA loan, you're going to wait 6 months to be able to
Mhm,
do that refinance. If you go from FHA to conventional, you can refinance at any time that you want, as long as it's a rate and term refinance where you're just changing the rate. You're not pulling cash out. So for most people, they're doing an FHA streamline, so FHA to FHA. So
mhm.
you're going to wait about 6 months to get that going
Why would somebody do that?
from FHA to FHA.
Mhm. Why would
Uh,
they need to
so
do that?
The streamline refinance is really cool because you don't have to go through the whole underwriting process. So you don't have to have an appraisal. There doesn't have to be a credit check. You don't have to check income. Basically, the main thing they're looking for is that you've made your payments on time.
Mhm,
And if so, then you can take a lower interest rate. So if the market rate you bought at was 8%,
mhm,
if you have an 8% in the beginning, let's say you've lived in your home with an FHA loan for 2 years,
mhm,
then you could do a streamlined refinance. Let's say the current market rate is 6% and
mhm.
refinance into the 6% rate now without having to do all the extra work of a traditional refinance.
Okay, okay. Um I just was like I was confused, like, I thought they were, like, closing, and then right after they closed, they wanted to switch over to
Oh.
conventional. And I was like, "Why would you do that? You just closed
That
on
would
the
be
house,
super
how can you
strange.
do that?" I was curious, I was like, "Why what happened? Why
Yeah, I
would you
mean,
need to do that, like, immediately?"
you could. It would just be, I don't know why
Why?
you would do it. It'd be a bad
Yeah,
decision.
why? Like, unless, like, the interest rates, like, when the like, say you closed at 6% and then all of a sudden interest rates went down to 2% maybe.
Yeah, I mean, if you had a huge interest rate drop, maybe. I don't know why else you would do it.
Yeah,
I would
yeah.
not recommend going straight. Don't do it as back to back. That would be not good.
No, no, but I've seen back-to-back close like, I saw this real estate agent back in the day. She bought a new constructed house. She bought it, right? Literally walked out of that closing, walked into the next closing with, with the keys. She bought it and sold it the same
Mhm.
day, so she could make more
Wow.
money, $50,000. She made an additional
Really?
$50,000. Yeah,
Wow. Okay.
yeah, yeah.
I feel like there's an easier way to do that with a purchase contract, and you could have just done what's it called? It's
This was
basically what
back in
wholesalers. It's basically what
yeah,
wholesalers do.
yeah, this was back
Uh,
in the day during Katrina.
okay.
Yeah. Yeah. Joni Johnson has a question. Oh, Eddie, you took it off the screen. This is, have you hit the like button yet? Subscribe to help out each other. Christina, hear about Christina's content. Thank you, Joni. I appreciate
Is
that.
the chat getting political?
Oh yeah, well,
Let's see.
luckily for me, I have some really good moderators, and I don't mind a conversation about policy whatsoever. Like I don't have a problem with that. But when you start like, oh, your side's better than my side, and my side's better than your side, and then like the finger pointing and the name calling kind of stuff, I can't do it. I mean, we're not in middle
Hmm,
school, and so my moderators know that, and they will give you a
nice.
warning, or they'll just kick you out. Like I don't have
That
patience
works.
for it. Like we're grown-ups, so we should act like grown-ups. We're not gonna do any of the little name calling and stuff. It's just
Yeah.
ridiculous. It's just I'm bigger than that, and I admit it. Sarah V says, "Is it better to sell than buy or buy than sell?" Ooh, that is
Is it better to sell than buy or buy than sell?
okay.
Are they just talking
So,
about like the logistics of it?
well, yeah, because some people like they'll say, "I have to." like they'll be in that should I sell my house first and then go look to buy, or should I go ahead and buy and then try to sell it? That's going to be very dependent on many things. What is your financial
Yeah.
situation? That's going to be one thing. What's the market like in your area? That's going to be another thing. Can you handle payments if you don't sell right away and you have this second house? How long can you handle? How long can you hold off on? Are you going to end up being panicked and have to drop the price of your house drastically because you're running out of time? There's going to be lots
Yeah.
of things you need to weigh out. I would do, if you're considering this, do a pros and cons list and meet with a local real estate agent in your area to understand what's actually going on in your market and how long it would typically take for a house like yours to sell. Also, listen
Mhm.
to your real estate agent when it comes to pricing your house. Don't overshoot, because the kiss of death for a listing, the kiss of death, what keeps a listing sitting on the market for too long, is that once you put it on the market originally, is you overpriced it.
Mhm.
Like everything in your neighborhood selling for 325, but you think that you can get 350, and then you held it there for 3 weeks, and then you dropped it down to 325. Well, now it's an old listing. And now you're not
Yeah.
getting any showings and you don't understand it. But the house next door that looks worse than yours just went under contract at 325. Why didn't they come look at your house? Well, your listing's old and you overpriced it to begin with. So you kind of
Yeah.
like shot yourself in the foot by doing that way.
Yeah.
Yep, yep, yep. Not that you don't list homes. You should go get your real estate license.
I am in the process of getting my real estate license, and it is the most boring thing I've ever done. Like,
I
it's
know.
it is it's
And none of
destroying
it,
me.
zero
It's
of it
awful.
do you use on a daily basis.
Ugh,
None of it's
ap
about filling out contracts,
appurtenances and
encumbrances, and
terrible.
like, wait until you get to the land stuff. The land stuff will make your brain bleed. There's so many things
I
you can go wrong with purchasing land. Unbelievable.
Yeah, it's all like made up words, made up systems around made up words. It's terrible.
In Louisiana, it's even worse because they're in French. So you have
Oh,
whatever
okay.
happens in the rest of the country is not the same as Louisiana. We have a whole different system going on here. And what we consider an acre, it's crazy. The whole thing is different.
Yeah.
And when it comes to inheritance law, it's really wild, because if I was to keel over dead tomorrow, my portion of the property, even though I'm on the mortgage and everything, it doesn't go to my husband, who's the surviving spouse. It goes to my
Mhm.
kids,
Okay.
unless you
Yeah.
have a will. Unless you have a
Yeah.
will.
Nice.
Jane Doe says, should you buy a home while still owning a home? Thoughts? Oh, that was similar to what I was saying. Um, that's going to depend on your financial situation. Yeah. The I would not I personally, like most people I know that are in this process, that go through this process, they have their house up for on the market. They wait for it to go under contract. But in the meantime, kind of shopping around the area, shopping around to see what else is available. And then they'll put a contract in on a house, once their home is under contract. Some of them will do it ahead of time because they know their house is going to sell pretty quickly, but most of them wait until they have a contract on their house before they put
Mhm.
in an offer on another home, so they can
Yeah.
just go from one property to the next.
Right.
Yeah. Who's on first? That's a great screen name. Question: what are your solutions? The Whisper Weekly Top 10 list. Every week, there's a healthy discussion about how awful the market is, but
Mm.
how about a segment of solutions and actions to take? Oh, I talk about them all the time. If we're talking about affordability, there's several things that I talk about. First of all, we need to give home builders incentives to allow them to make money to build affordable homes. The reason why you haven't seen those little small affordable houses like we used to is there isn't enough on the spreadsheet for a home builder to make that money back. It costs them a lot of money to set up that piece of property before they even scrape the ground to build their first house. So if you gave a home builder a tax incentive and cut some of the red tape that it costs them for development of property, then you would see a lot more smaller, more affordable homes second thing that we could that can be done, and there is efforts and talks about this, is you could work with more modular home companies to start putting down modular homes, which are built to the same specifications, if not better than traditional stick-built homes. You can basically pour out, let's say, 10 concrete slabs on day one, right? And on day 5, you already have houses that are being put up and putting doors and shutters on them. If you built the same kind of house all the way down. They used to do this. They did this after World War II. It can be done again. Again, a red tape needs to be eliminated. A lot of red tape needs to be eliminated. And again, you offer those incentives to home builders. You can get a lot more homes on the ground for those first-time home buyers. One last thing. Oh, we could start looking at conversions of properties, because we're going to have an influx of baby boomers that are going to need residential assisted living, right? And this is going to be one of those things that's going to be a problem coming up really soon as more baby boomers are starting to age. We can turn in like abandoned malls. We have a lot of commercial real estate right now that is pretty much almost worthless. And you can convert those into assisted living facilities for the baby boomer generation that's going to be needing it really quickly. So
Yeah.
there's some solutions.
One, too?
I'm getting this in thought. Yes.
Okay, mine's slightly a little bit alternative. I feel like there's so much, like, real estate YouTube has kind of shifted, I think, all to this person's comment, like, quite a bit away from here's solutions and things you can do and how to prep for how to buy in your market and what's going on, to a lot of just like commentary on here's how bad everything is. And so first, like, you have the control over what you consume and what you watch and where you get your information from. And so I don't know how, like, it'd be very easy if all the time I was looking at negative information of how awful things are and what's happening either in real estate or just in whatever else is going on in the world. And then to just feel stuck and isolated and like I don't have control over anything, because that's what if that's what I'm constantly putting into my life, that's all I'm going to be able to focus on. Our brains are designed for survival. And so if all it's seeing around me is fear and chaos and my inability to do things, what my body is going to do is shut down, guard itself, and do everything I can to not focus on a solution. And so first, I would say, like, if you're constantly being exposed to all this information, start taking a more objective look at where do I get information from? It's valuable for me to take a look at information from all different sides, but all the time I can't be focusing on everything that's coming in and letting other people control what happens in my brain. Because every time I see an article, it goes right into my brain. And I'm keeping, I want to keep focus of where do I get that information from? And really, I think that what most people want is they want to buy a house and they want to do it with as much calm as possible. And they want to make the best decisions. And you cannot do that.
Save the most money.
And save the most money. You can't make good decisions. You can't buy a home in a calm way and make the best choices for you and your family if you're constantly surrounded by information that's overwhelming you and just talking about what's bad. It really needs to be a more balanced perspective. And we can talk about what's wrong in the market without having the emotional play that a lot of videos are really kind of preying on people. They're preying on like your emotion and the fear that you might have around it to get you to watch and to stay, keep coming back to those types of videos.
Right. And the other thing too is sometimes if you just read a headline, you're not getting the full picture. Right. So a lot of times
absolutely.
So you'll see those videos come through and you're like, it will say one thing, but if you actually listen to the video, they're actually saying the exact opposite of what the headline was. Like, oh, you heard that the housing market is all crashing. Like, let's just say the headlines, the housing market's going to crash worse than it ever did in 2023. Like, let's just say something like that. Then they'll say, some experts are going to tell you that the housing market crashed in 2023, but here's what really happened. And then they get into it, right? So if you're just reading the headlines, you're not even like, it happens to all of us. We've all done this. Like, oh, I just saw in the news, but that isn't what it said in the article. Like we've all done it. And that happens too. So when you're scrolling through YouTube, you'll see a headline and you're going to say, oh, Kristina said this. but that wasn't what I
Yeah.
said. You just saw the headline.
And the
Um,
endless like charts going down.
right, right. And the thing is that part of our job as people that make content is to get people to click on the content first. And what do they click on? They click on sensational headlines. They click on ghastly thumbnails, surprising thumbnails. And we put a lot of time and effort into those things. And in some cases, if you're just seeing it just on the surface level, you can feel like it's all negative. But I
Mhm.
I always try to give some kind of positive spin on anything that I find. The only thing I can't give a positive spin on is corporate investors buying up
Right.
housing. I can't
I don't
do
think it
that
needs
no
a
matter
positive
how.
spin.
Yeah. I can't put a bow on a turd like that. I just can't do it. That's a big giant flaming turd. We never got to our article. We never got to our
Oh,
article.
oh my, I
Eddie,
forgot
let's
that. I
put up
forgot
your
we were
article.
doing that.
We this whole time I was just been blah, 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 just talking, gobbling away. We have over 300 people watching on the stream. I appreciate everybody coming out here and watching because I know there's a football game on. Eddie had it on. Home buyer demand pushes mortgage applications higher in even as interest rates inch up. They make it seem like and the reason I chose this inch up, it was like slightly up. Wasn't it like slightly? Like
Oh,
a thin hairline up.
everything is like maybe an eighth of a percent change that happens, and it's like the interest rates crashed, interest rates skyrocketed, and it's so much hyperbolic language. And we talked about this maybe like 30 minutes ago about everyone's everyone's so emotionally sensitive because it's all on expectations of what's going to happen in the future, and everyone's using such strange language for these tiny little changes.
Oh, I know. The one that was like, "Foreclosures are up, 200%." That was like, right after the forbearance had ended.
It goes from like 7 to 14.
Yeah, but yeah, well, the thing is that everybody was in forbearance, right? And
Yeah.
then, like, there were no foreclosures during that time. You weren't allowed to put anything on foreclosures because it was like a shutdown at that moment, right? So, of course, soon as everything started back up again, all those homes that were already in foreclosure, there wasn't
Yeah.
anything stopping it. There was no people living in those homes. They went on the market. So it looked like we had this huge surge. Which there was no surge. And even to this day, we're still like we're right in line as where we were in 2019. We're right where we were with foreclosure rate, exactly where we were in 2019. And I'm going to tell you right now, I can even see that number coming down somewhat because I don't know if you know this, but you remember during the time when people were taking forbearance, when it came to VA loans, for some reason, they got messed up and they were basically told that when forbearance was over, they owned a balloon payment of everything that had been missing
Mhm.
since they took forbearance. They've since fixed that, but oh, I was panicked for those people. I'm like, this is going to affect a lot of families. It's going to be bad.
Right.
Eddie, what are you showing me there? Because that is like this big. This like this big. My over 50-year-old eyes cannot see that. If I go in really close, mortgage rates moved higher. I can't read that. You got to
I
be
got
out of
it.
your mind.
Mortgage rates moved higher at the start of this week, although there appears to be no particular reason for the increase. The average rate on the 30-year fixed, according to Mortgage News Daily, is now 6.92%.
God, you made it sound so much better than I would. Your voice is like butter.
Oh
My
man,
friend would say your voice is like moisturizer.
moisturizer. I still want to know where that sandwich is that someone else talked about.
I know. I wonder what kind of sandwich his wife made for him since the wife is so good looking. You have a voice like moisturizer. If anybody wants to hear more of Kyle Seagraves' moisturizer voice, he actually has a channel on YouTube here. It's called
That's
Win
exclusively what I do. I do moisturizing voices, and if you're looking for that,
Win the house you love. Affordable homes that match your budget. Oh, I like that. You know
thanks.
what? I never even saw your banner before. This is really good. I think I'd like you better without the mustache.
So I did the mustache just as it was a trial run like a year or two ago. And then I went outside a lot over the summer and I got a little tan, even though it doesn't look like that right now. And I was afraid that it was going to be I was afraid I was going to shave it off and it was going to be like white underneath. And so that's why I didn't for the longest time.
Uh-huh.
But here we are now, it's gone. So the mustache won't scare anybody anymore.
Yeah, I don't like it. It makes me uncomfortable. SB said it was a peanut butter and jelly sandwich.
Oh, okay. All right. Those are good. Those are good.
Yeah. I was hoping it would be something fun, like a Reuben or something.
Oof.
I love
that
a good
sounds so
Reuben.
good.
You know, if anybody's looking for a real estate agent throughout the United States, I'm actually connected with thousands across the country. All you have to do is go to my website, KristinaSmallhorn.com. That's where you get a free picture of my feet. Free feet pics. See, look. You
Oh,
can see my
wow.
feet.
Why did you do that?
That's what my daughter said. And I'm like, it's like,
Oh, no, you shouldn't have done that.
that's what my daughter said. I'm like, hey, Aubrey, I'm over 50. No one's looking at my feet. They don't care.
There's a whole. Okay, do you know what WikiFeet is? I'm really derailing this live stream here for you.
No.
There is a whole website dedicated to people's profiles and their feet, and it is everybody. It's mainly celebrities, but if you don't have an account, I'll start one.
Like,
I'll start one for you.
My stomach is nauseated.
Here,
If you happen to need a referral for a real estate agent, go to my website, KristinaSmallhorn.com, check out my feet, and then click on a pink button. Fill out the form. Please put your phone number so I can get a hold of you. I personally will give you a phone call and we can talk about your real estate needs. If you happen to like this show and you want to hear it in the car so you can hear Kyle Seagraves' moisturized voice, you can go over to Kristina Smallhorn, Real Estate for Everyone. I have a podcast anywhere you get your podcasts. That's where I'm at. You can see me there and you can listen to us in the car. You can listen to us in the car. Kyle, I want to tell you thank you so much for spending the day with us. I know there was football on and you probably wanted to watch that much more than you wanted to be here with us.
You can tell I'm a huge football guy and I sacrificed a lot to come here. No, this has been really fun. Thank you for having me, Kristina.
Oh, I hope you come on again because this was great. I didn't even get to my articles like I normally do. I do one next week. I'm going to be talking to everybody. Found a girl who turned a home from a shed into a house. I'm gonna show you guys what she did. Is absolutely stunning. I mean, it's breathtaking. Breathtaking. Thank you so much, Kyle. Thank you so much to our moderators. I appreciate every single one of you. And thank you so much for the over 300 of you that stayed with us today to talk about mortgages and everything that's going on in the housing market. Until next week, 3:30 p.m. We'll see you soon. Y'all be careful. Thanks so much. So long. Farewell. Evita saying goodbye. Normally Eddie puts on some music. I must have forgotten.
You're gonna
put out.
You gotta go to my WikiFeet when this happened.